Welcome back everyone, this is our weekly gold review. Gold performed its largest daily drop in several months yesterday after it had moved extensively higher during the previous week. Traders and investors may have chosen to book profits by closing their long positions after important fundamental and political developments took place in the previous days. These matters will be examined through this report. Our aim is to provide a simple but informative report including the most important matters currently moving gold's price. At the end, our technical analysis will provide some trend observations that could prove useful from our point of view. Yesterday, traders were particularly interested in news of a COVID-19 vaccine currently developed by Pfizer and BioNTech, which is claimed to have shown very positive results. The vaccine could be able to prevent over 90% of infections according to tests performed on tens of thousands of volunteers. With the tremendous acceleration seen in COVID-19 cases globally, and with cases surpassing 50 million, the news yesterday was the most positive scientific advance so far in the battle against the pandemic. Gold's risk appetite can relate to the global worries over the spread of the virus, thus, any positive news can have an adverse effect on gold's price. In our opinion, the news yesterday may have created the selloff for gold, indirectly displaying investors' temporary relief on lowering healthcare and economic risk. The effect was also seen in the major US stock markets, which is evidence of emotional trading and sensitivity towards the matter. Some issues over the vaccine, however, create questions. The vaccine needs to be 100% clinically safe in order to be prescribed. Also, the fact that it may require time to manufacture and distribute the vaccine worldwide implies that the current circumstances with the spread of the virus could follow us well into the next year. An even further extension of the vaccine preparation could irritate investors. On the contrary, an acceleration of the vaccine's manufacturing and distribution could excite investors. In our opinion, and very similar to the reaction that traders had yesterday, gold will be among the instruments that will react strongly to any news on the vaccine, so traders should be cautious. In any case, the vaccine development may speed up as the matter is turning into an emergency internationally. The major sell-off for gold occurred during the European midday on Tuesday and was continuous until the US opening, where the strong bearish momentum was set under control. Gold was also affected in the previous week during the US presidential results. As Joe Biden increased his electoral college votes, the USD weakened, pushing gold to a very strong week for the bulls. Any significant moves that the new US president announces could motivate gold trading, especially regarding fiscal stimulus packages. During the next days, some important financial releases from the US will take place that could move gold's price. On Wednesday, the 12th of November, we get the October US CPI and the weekly initial jobless claims figure. On the next Tuesday, the 17th of November, we get the US retail sales and industrial production readings, both for October. Overall, economic circumstances in the US continue to improve, with evidence the latest employment report released last week that indicated a sharp decline of 1% for the unemployment rate. The results are rather optimistic for the next months. But for now, the fight against the pandemic is the most important, and gold's price action could be a great metric to how good or bad things will be going. Moving now to our technical analysis. This is gold's 4-hour chart. After the significant drop observed on gold's price yesterday, the precious metal broke below our S1 1865 support level and even aimed for the S2 1845 line, but did not reach it. However, if the bullish movement is to continue, then a retest and subsequent breach of the pre-mentioned levels could lead the precious metal even lower to test the S3 1820 level. In the opposite direction, the R1 1890, which was tested as a rebound, was formed after the drop, may come into play. Higher, we have noted the R2 1910 hurdle, and even higher the R3 1930 barrier. Looking at the daily chart, and after the correction lower yesterday, the precious metal has returned in the range between the R3 1930 barrier and the S1 1865 support level. Gold moved in a sideways motion in this range since the 21st of September until the 5th of November. From a daily chart viewpoint, the precious metal remains in a selling momentum since August. That's the end of this report. We hope you enjoyed it as well as found it useful. If you like this video, make sure you share and subscribe. Thank you very much for your time. Enjoy. Solid trading.